Hi, this is Shweta from ClearTax. Today I'll speak about income from taxation of house property. A house property can be a residential property or a commercial property, or it can be a vacant land which is attached to any property. Income from all the types of house property gets taxed under income from house property for income tax purposes. How do you tax the income? There are three basics about taxing income from house property. The actual rent received or receivable gets taxed. You should be the owner of the house property. And third thing are the deductions that you can claim from the income. In the taxation of income from house property, you need to determine whether your property is self-occupied or whether the property is let out. In case of a self-occupied property, the annual value is nil since you do not receive any rent. However, in the case of a let-out property, the actual rent you receive or that is receivable by you will be taxed as income from house property. Such value will be treated as the annual value from the house property. Second thing, when it comes to municipal taxes, you can claim a deduction for the actual tax paid to the municipality of your town or city. In that case, the annual taxes paid are claimed as deduction by the person paying the same. Next, you can claim a deduction for the interest paid on the house property. In case of a self-occupied house property, you can claim a deduction up to Rs 2 lakhs per year. In case of a let-out property, you can claim the entire amount as interest. However, there are certain restrictions when it comes to claiming a loss from house property. Apart from the deduction for the municipal taxes and for the interest on home loan, you can claim a standard deduction of 30%. In the steps to compute income from house property, you first claim a deduction of 30% standard deduction of the actual rent. Next, you claim a deduction for the municipal taxes. And lastly, you claim a deduction for the interest on home loan. In case you are a joint owner of a house property, each joint owner can claim a deduction for the 30% standard deduction in respect of their share of the income from the house property. They can also claim the share of the municipal taxes or in the share of the ownership. They can also claim a share of the interest paid on the home loan based on the share of the ownership. There are certain conditions for claiming a reduction for interest on home loan on house property. One of the conditions is that the house property should be constructed within a period of 5 years from the end of the financial year in which you take the loan. The second condition is the deduction for the interest will be based on your EMI certificate that you obtain from your banker. In case you have taken a loan for repairing a house property, you can claim a deduction for the interest paid up to Rs 30,000 per year. Next, we will discuss about loss from house property. In case your interest payment exceed your rent received, the loss can be claimed and can be set off up to Rs 2 lakhs. In case of a self-occupied property, you can claim an interest outgo up to Rs 2 lakh. In such cases, the loss from the house property of 2 lakh can be claimed against your other income, such as income from salaries. In case of a let-out property, a loss from house property which is above Rs 2 lakh can be carried forward for a period of 8 years. Lastly, in case you own a house property and also make home loan repayments, at the same time, if you live in a rented property, you can claim a reduction for the house rent allowance as well as claim the EMI portion of the home loan payments. The principal portion of the home loan payment can be claimed under Section 80C. A maximum of Rs 1.5 lakh can be claimed each year, while the interest portion is claimed under the income from house property. That's all for today. Do like our videos and share our videos, and do not forget to hit the bell icon. Thank you.